Hi everyone, welcome to today's video. So today's video is very interesting. I'm going to show you how to analyze a particular stock and take buy or sell position in it. Number two, I'm going to talk about a few free resources, absolutely free resources that you can use to analyze both Indian stocks and US stocks. I'll pick up a case study of one company and then I will show you how I do a research on this. So this video is for serious learners only. In case you are here for stock recommendations on this video, you will be disappointed. So with that said, let's welcome all the serious learners and let me take you through a 4-step process that I use to personally research about a particular stock. So step 1 is that you must do industry analysis of any stock that you're considering to take position in or sell that stock. So for example, let's say that you're looking to pick power company stock, or if you're looking to pick an EV stock, or if you're looking to pick a finance stock, then these are different industries and you need to keep certain things in mind while researching this industry. So what are some of the key things that you must keep in mind? First and foremost, you must keep in mind that how is it that any company that you're considering, so let's say that for this purpose of the video, we are considering Disney, right? And this is a company that all of us can relate with. So if you're considering Disney, then the first question that you need to answer is that how is Disney making money in this industry, right? Industry. So which industry are we talking about? So if you are not sure Disney is in which industry, this is where we start using Google to identify where Disney is operational and how is it making money in the industry in which it is operational. So we go by Walt Disney revenue by segment. So this is an easy graph that we will get. So what are some of the industries that you see here? So you will first and foremost see parks and theme parks. This is me in Hong Kong in Disney theme park. Now then we have media and entertainment. Now Disney comes out with a bunch of movies, bunch of TV shows, makes a lot of money. This is its massive revenue stream. Then it is also operational in a bunch of other D2C type of merchandising. For example, it sells Disney t-shirts, Disney cups, and bunch of different things. So a bunch of different industries where it is operational. If you have to define one word, it will be entertainment and media industry, right? That is how you will define it. Disney also owns Hotstar. It is called as Disney Hotstar now. So that is again a massive revenue stream for Disney. So through this little bit of Googling, you will be able to understand how is it that a company is making the money. Then we move on to the next part. We understand the scale and scope of what? Of the company? No, of the industry. Okay. So we try to estimate through our own analysis or by reading newspapers or by reading a few articles that where is the industry growing and what are some of the potential avenues where it can grow. So about the entertainment industry, what are some of the hard truths that you know? So first and foremost, I'm sure that you will tell me things like that, okay, Akshat, you know what? Entertainment industry changing a lot right now. People are not going to movie theaters. People are watching a lot of streaming services because I keep on hearing like Netflix jokes and this joke and that joke. So streaming service is picking up quite actively, but movie business, especially in theaters, that is coming down, right? So this is one key point that is definitely happening. This is one key trend that you will easily observe by Googling stuff, right? What are some of the other key things that you're noticing in this industry? You must be noticing the fact that in the entertainment space, IP is very important. For example, if you're a fan of Spider-Man, Batman, Wonder Woman, what are these? These are literally intellectual properties. Same goes for Mickey Mouse, Minnie Mouse, Scooby-Doo. These are all intellectual properties. So you need to keep an eye out as to which company is winning this race in terms of intellectual property. Now, these are not just animated or character-driven things. Intellectual property could mean something like Harry Potter also, which is not necessarily an animated movie, but it has such a strong brand value around it. That is the intellectual property that Warner Bros. Owns, not Disney owns. So you need to consider entertainment stock from that particular perspective. What else? Similarly, you note down all the key trends that are happening. This will help you populate the list. Now, again, the goal of this video is not for me to tell you whether to buy Disney or not. No, I'm just helping you understand how to do the research. Then we move on to the next point, which is understanding the expansion potential. For example, if you ask yourself that, hey, is the entertainment industry going to go up or is it going to come down? The answer is it will definitely go up. People are spending so much time watching Netflix now. So streaming services are picking up. This is definitely happening. Now, IP, for example, Wonder Woman, Superman, and bunch of different IPs are also very strong. Why? Because the entire NFT economy, playable games economy is picking up, and this can really play out and define the next leg of growth in this IP oriented domain. So these are some of the key things, or expansion potential is something that you must keep in mind. You must research a little bit more. And then subsequently also analyze the conglomerate nature of businesses. For example, when we are looking at Disney, what is happening on Disney? Disney is not just one single thing, right? Disney is theme park business also, right? Theme park business also, right? It runs a bunch of different theme parks. It's movie business also, right? It's streaming business also. So it has a bunch of different things. So if you're looking to invest in something like Disney, you must do an industry analysis of all these different things. Okay, now you'll say, Akshat, you're boring us. You are like, asking us to do so much reading, so much analysis. Honestly, guys, if you want to become like good stock investors or investors in general, you have to do all this reading. You can't take like shortcuts and say that, just Akshat, tell me like 5 questions that will come in exam and I'll get like 99.99% marks. No, you have to study things conceptually. So please understand this lecture from a conceptual clarity point of view. Then we move on to step number 2. So once you have done industry analysis, you need to do firm specific analysis. This is again a second key important step, right? So you need to do business analysis of the firm. So you move to firm level. And here the first question that you need to ask is that what is the comparative moat of the company? Now, what is comparative moat? Moat simply means the advantage, right, that the company enjoys, right? Now there are multiple types of advantage that a company could enjoy. For example, something like Hindustan Unilever has a moat, which is supply chain management. They get like so much good data. They are able to use that data to segregate customers, do their pricing accordingly, get better space on the retail shelves, and bunch of different things. Similarly, if you take a look at page industry, now the moat of page industry is that it manufactures things really well. Similarly, if you take a look at the moat of Apple, what is the moat of Apple? Comment below. Otherwise, now listen to the answer. So essentially, moat of Apple is that it has excellent pricing power because it has such a strong, loyal customer base that no matter if they are going to create the next version of laptop at 30% jacked up prices, people are still going to line up and buy it. That is how strong the brand is for Apple right now, and their customer base is super loyal. So you need to understand that a company needs to have some kind of competitive advantage. If it does not have any competitive advantage, it will get evaporated. So since we are on the case of Disney, what is the competitive advantage that Disney has? In my opinion, the IP or intellectual property is something that Disney owns. And for example, and please pardon me if I'm wrong and if I'm taking some incorrect names of some characters. For example, if Disney owns Mickey Mouse, right? Now that's a character. You can create a bunch of different things out of Mickey Mouse. You can sell hats, you can sell t-shirts, you can sell coffee mugs, you can sell a Mickey Mouse brand, Mickey Mouse pancake, whatnot. That is intellectual property. Now Disney over the years have been able to populate this IP really well, right? And it's not as if that, for example, my son is very young and by the time he's 4 or 5, he would have still heard of Mickey Mouse, right? That is how strong the brand value is. That in my time also, I know Mickey Mouse, my parents know Mickey Mouse, and my son is also going to know Mickey Mouse. That brand value and brand recall is massive, that everyone knows Mickey Mouse, and Mickey Mouse is owned by Disney. Now Disney can monetize Mickey Mouse in 100 different ways. So you need to have an understanding as to why you are investing in a firm. First key reason to invest in any firm is that, hey, it has some kind of competitive advantage. Second key point is that you should look at the financials, because financials are like report cards. They categorically tell you whether companies are doing well, companies are not doing well. If they are not doing well financially, then you must figure out and uncover a reason. So now let me take you to Vested. They have an excellent platform and you can do all this financial comparison and financial data analysis for free on Vested platform also. For example, here you can take a look at the total revenue for Disney and it goes from $55.14 billion and there has been a clear uptrend, right? So this is a good data point that revenues are going up. Then again, you can see this trend that it has a very stable cash flow. It's a mature company. Subsequently, what about profits? So you need to read from right to left, right? So the profits are generally on a increase, no problem there. Net income, you again can see this is probably the pandemic year. Yes, so September 2020, that is where Disney took a loss because probably all the theme parks were closed and bunch of negative things. So from that perspective, Disney seems like a decent company. This is not a buying or selling recommendation. I'm just telling you that you can use all these resources to do your analysis. Furthermore, in order to understand the current trends of the company, you must always read the earnings report. So in the US, you should definitely read the earnings report. In India, the data is not that clear, so you should read conference call details. But in the US, earnings reports are very good and they have summarized it very well here on Vested. For example, this was the expected earning potential of the company, expected EPS, and the company diverged from here. Similarly, you can take a look at how the expected EPS and actual EPS was. Then read all the news articles, additional current details that you can take a look at, and definitely read the earnings report. So how do you get the earnings report? So you simply go on Google, type earnings report Disney, and you will get this earnings report. Then you can go and read this entire earnings report. It's super boring. Otherwise, you can just watch my videos. I summarize all the data for you. So I study more than applicants who are preparing for IIT JEE. Then you would say, Akshat, okay, great. So first I try to develop that where the company is competitive. What is the moat of the company? I looked at the financials. It tells me the story behind the numbers. In India, you can use resources like Screener and TickerTape, which are free resources. They have a paid and upgraded plan also. You can use that in case you are interested. But even the free resource here is very good. What about US? Use Vested. It's a wonderful platform. I invest in US stocks from Vested and they give out aggregated data also. Read earnings report. Very, very important. Very clear data you will get on this. And you can also use Yahoo Financials. These are 2-3 resources that you can pick up to analyze Indian stocks also and US stocks also. So by doing this basic analysis, you will get an overall viewpoint, right? Overall viewpoint means that, okay, hey, you know what, net, this is a good company. Then what you do is that you start using frameworks like QGLP framework. Now, people who listen to my videos, please tell us in the description box, what is QGLP framework? I have explained it multiple times and which investor has propagated this framework. So essentially QGLP simply means quality, right? Quality, growth potential, longevity, right? Longevity and price, right? So quality means that, hey, how good is the stock? So you'll have your answer by doing this analysis. Growth potential, you have done industry growth potential analysis. Longevity means that, hey, you know what, this firm can beat the competition and is it available at a good price, right? So this fourth point is something that you need to understand via using technicals. So which brings us to the next section, that how do you discover prices? But do tell me which investor gave this QGLP framework. Okay, so how do you discover price and figure out that, hey, if something is good or bad? So for this, I would just recommend you one simple tool. It's a free tool. It's called as tradingview.in. So let me take you to that. So on tradingview.in or tradingview.com, you can go. This is again a free tool and there are a bunch of indicators that you can use. From time to time, I keep on teaching you technical indicators also. So there is a tool called as 200-day simple moving average. So you go on FX, you type 200-day SMA, and this is a free tool that you can use, right? Now, what does this 200-day moving average tells you? It tells you that, hey, what has been the average price of the stock in the last 200 trading days. So right now the stock is trading below its 200-day moving average. So this is an indicator. This is not a confirmation. This is an indicator. It indicates that, hey, you know what, the stock is available at an inexpensive price. Now you have to go further, analyze it, understand it, whether it makes sense to buy it or not. But one key indicator that is telling you to buy this is 200-day moving average. So there are a bunch of different indicators that I've taught on this YouTube channel. For example, very recently, I posted a video on zone of bulk buying. What is the channel analysis technique? So watch my technical videos. You will understand these different key, easy to understand points, and then you can figure out whether the price makes sense or not, right? If the price is not making sense, please do not enter in that stock. Please don't buy stuff which is super overvalued. If you buy it, you can get stuck even on a good stock for a very long period of time. So what was QGLP framework? That the quality of the stock is really good. Growth prospects really good in the industry also, in that particular company also. Longevity means that, hey, it can beat the competition, it can stay ahead in the race. And finally, price. So you use technical indicators, technical parameters, and TradingView is the only tool that you need to do that. If you use these parameters, you will at least have a basic sense whether to enter into a stock or not. Once you have done this basic analysis, you need to ask yourself the final question that, hey, does it fit my portfolio? Now, this is a personalized question, so I can't say. A lot of times people ask me that, Akshat, you purchased HDFC EMC, should I also do it? I don't know, because I don't know whether it will fit your portfolio or not. So what do I mean by this, right? For example, if I talk about my portfolio right now, so it would be like this, right? So it would be roughly, let's say 20% cryptos, 10 to 20% cryptos, 80% in stocks. These 80% are then divided into 80% Indian stocks, right? And then 20% US stocks right now. And within these Indian stocks, I would have almost 50% in banks, right? 50% banks, right? Or finance stocks. and 50% non-finance stocks, right? Non-finance stocks, right? And what about US? My 100% portfolio is in growth-driven tech firms, right? So why is that I have invested all my 100% money in growth-driven tech stocks in the US? The reason is fairly simple, that I'm taking 0 positions on tech stocks in India, right? Literally 0% of my portfolio is on tech stocks. Very little part of it is in tech stocks. Why have I done it? Let me know. I'll make a separate video on that topic altogether. So from this perspective, should I be buying Disney? If it's a great stock, the answer could be yes or no, right? For example, if I want to diversify my portfolio in the US, that I want to go outside tech buying also, then I would buy something like Disney if everything looks great. But if I'm of the viewpoint that, okay, you know what, in the US, let me just only buy tech stocks, then I would probably not buy Disney. So you guys tell me if I should be buying Disney or not. But here is what we learned on today's class, that in order to analyze a stock, first, please research about the industry. Very, very important. If you don't have confidence on the industry, don't take positions in it. Number 2, please ask yourself the question that, hey, is the fundamental of the stock good? You do this by analyzing competition, its longevity, its quality. Then you go on to price, which is ascertained by using the technical indicators. And finally, you take a look at your portfolio and ask yourself the question that, hey, does it make sense for me to be buying this stock? Does it fit my portfolio? If the answer is positive to all these different points, then only you enter a stock. So I hope you enjoyed the video. Let me know if you value this type of fundamental learning. If yes, please give it a thumbs up, please comment, and it encourages me to make more such videos. And all the people who come for stock recommendations, if you have stayed tuned on this video up until this point, big kudos, and I will make some stock analysis videos also. So I hope you enjoyed the video. I'll see you tomorrow.